How Warren Buffett built his $500 billion empire. Even though Warren Buffett is now the fourth richest man in the world, his wealth could have been even greater if he hadn't donated billions of dollars over the years. A lot of people wonder, how did he amass such an incredible fortune? Well, it boils down to his commitment to investing, making smart financial decisions, and surrounding himself with disciplined people. Buffett didn't become a millionaire overnight. He started investing young and stuck to key financial principles throughout his life. Let's dive into his story. So, who is Warren Buffett? Warren Edward Buffett is a well-known American business magnate, philanthropist, and investor. As the CEO of Berkshire Hathaway, he's built an empire that goes way beyond traditional finance. By December 2019, his net worth was over $88.9 billion. Can you believe that? One of the richest and most respected men in the world. And if he hadn't donated so much to charities, he'd likely be even richer. Buffett is famous for making smart financial moves. He's often called the Oracle of Omaha. But he started from humble beginnings, selling Coca-Cola bottles, chewing gum, and magazines door to door. This early hustle shaped his entrepreneurial mindset. At just 11 years old, he made his first investment, 3 shares of City Service preferred stock, thanks to his dad's help. This was his entry into the stock market and laid the groundwork for his future success. By the time he was 26, Buffett had already started his own investment firm, Buffett Partnership Limited. For 13 years, he managed the company, and get this, it had an average annual return of 29.5%, way higher than the market average. When he wrapped up this partnership, it was worth over $60 million, and Buffett himself was already a millionaire. But that was just the beginning. The big turning point came when he was 34 and bought Berkshire Hathaway, a struggling textile company. He turned it into an investment powerhouse, setting up a platform that allowed him to manage huge sums of money on behalf of investors worldwide. This move defined his career. Buffett's most significant investments. Berkshire Hathaway became the foundation of Buffett's legacy, with his famous shareholder letters providing insights into his financial philosophy. Those letters are like a roadmap for successful investing. Remember these gems? Price is what you pay to value is what you get, and be greedy when others are fearful, and fearful when others are greedy. Simple, yet so powerful. So how did Buffett actually build his empire? It wasn't just sticking to sound principles, it was about strategic investments in undervalued companies. Let's break down some of his key moves. 1. Disney, 1965. Buffett invested $4 million in Disney stock after a meeting with Walt Disney himself. At the time, Disney wasn't the entertainment giant we know today. Buffett saw its potential decades before it became a household name. 2. Newspapers, 1970s. Buffett bought shares in newspapers, establishing relationships with the owners and strengthening his reputation as a forward-thinking investor. 3. Geico, 1976. At 46, he started buying shares in Geico, eventually taking full control by 1996. This was one of his most profitable investments ever. 4. Coca-Cola, 1988. One of his most famous investments. He bought a 7% stake in Coca-Cola for $1.7 billion. Funny enough, he actually sold Coca-Cola door to door as a kid, which helped him see its long-term potential. Buffett built his empire by investing in companies with strong business models, brand power, and long-term growth. As he became more successful, more investors wanted to partner with him, giving him even more capital to work with. Buffett's investing philosophy. So what's the secret sauce behind Buffett's success? It comes down to a few key principles. 1. Value investing. Buffett looks for companies that the market undervalues. He has a knack for spotting value where others don't. 2. Long-term focus. He's famous for saying, "My favorite holding period is forever." He invests in companies to hold them for the long haul, letting them grow over decades. 3. Keep it simple. Buffett only invests in businesses he understands. No complicated ventures outside his circle of competence. 4. Emotional control. He stays calm during market volatility. As he often says, don't let your emotions drive your financial decisions. 5. Smart capital allocation. As CEO of Berkshire Hathaway, he's a master at deciding how to deploy the company's cash reserves. Conclusion. Building wealth like Buffett. Buffett didn't become one of the world's richest people by accident. His journey was about making smart investment decisions, recognizing value, and having the patience to hold onto investments for decades. His story reminds us that steady, long-term investing can lead to incredible returns. And get this, if you had invested $10,000 in Berkshire Hathaway when Buffett took over, that investment would be worth over $500 million today. Mind-blowing, right? That's the power of Buffett's disciplined, long-term approach to investing. That's all for today. If you found this helpful, give it a thumbs up and don't forget to subscribe for more content. Let me know your thoughts in the comments and check out these videos for more great insights.